Hey everyone, welcome back to Corporate Decoder. Today we're diving into the financial world of Onconetix, and it's a bit of a bumpy ride. Let's just say their stock is having a bit of a going out of business sale. Hopefully they can get out of this mess. We're looking at an 8K filing, which is like a financial emergency broadcast system. Companies use these to quickly tell investors about big unexpected changes. This one is about Onconetix possibly getting kicked off the Nasdaq stock exchange. Here's the deal, Onconetix got a warning from Nasdaq because their stock price was too low. There is a rule called the minimum bid price rule that basically says a company's stock needs to stay above $1 per share. Onconetix's stock price dipped below that and they were given 180 days, about 6 months, to get it back up. Unfortunately, things got worse. Nasdaq sent another notice because the stock price stayed at $0.10 or less for 10 days in a row. That triggers another rule, and now Onconetix is facing being removed from the Nasdaq. It means investors might find it harder to trade the stock, and it might make the company look less attractive overall. Onconetix is fighting back. They plan to ask for a hearing that's like a meeting where they can explain their side of things to a group of people who can make decisions about Nasdaq listings. Requesting this hearing will stop the stock from being immediately suspended while the decision is pending, but there's no guarantee they'll win. If they lose the hearing, their stock will be delisted. There is also other news in this report. Onconetix is postponing, which means pushing back, their annual meeting of shareholders. It was supposed to happen in June, but now it's going to be at a later date that hasn't been decided yet. They will also announce a new date to determine who is eligible to vote in the annual meeting. This report was signed by Karina M. Fergus, who is the Interim Chief Executive Officer and Interim Chief Financial Officer, meaning she is the temporary boss in both positions of this company. Now let's talk about what all this means. Onconetix is clearly facing some serious challenges. Their stock price is very low and the Nasdaq is threatening to delist them, remove them from their stock exchange. This type of problem can create a snowball effect. A low stock price can make it harder to raise money, attract investors, and even keep employees. If the company cannot stay listed on the Nasdaq, this might make investors worried. This could also be an opportunity for Onconetix to turn things around. Maybe they have a plan to boost their stock price, attract new investors, or develop a new product that will excite the market. However, right now the situation looks pretty risky. Here's my take. Onconetix is in a tough spot. The risk of being delisted from the Nasdaq is a major red flag. It shows that investors are not confident in the company's future, and it could create even more problems down the road. Onconetix really needs to turn things around quickly. They need to convince investors that they have a solid plan for growth and profitability. Otherwise, they could be facing some very difficult times ahead. This stock is not looking good right now. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more Corporate Decoder videos.